Hello, everyone. X Factor here. How's everybody doing? Good morning. Good morning. I want to do a quick recap of the trade that was taken today in the Telegram. A few of you took the same trade, which was awesome. Congratulations to you. Let's just get right down into it. This is one of my favorite models. This is the 10 a.m. candle that we trade. 10 a.m. candle. So this is the 10 a.m. candle model, if you want to call it that, whatever you want to call it. I'll title it at some point. But let's call it the 10 a.m. candle model here, the 10 a.m. CR model. So what we do is pretty much you mark up your 6 a.m. So you have NQ ES 2 6 10, right? And you have your Forex 1 5 9. All right. If you take a look at these candles, the bottom of the screen there, you'll see that's the 6 o'clock H4 candle. That's your 2 o'clock, 2 6 10. So you got to keep things very simple, guys. Do not overcomplicate your trading. It's straightforward. You're looking for key levels. Key level. Nice, beautiful fair value gap here. Also on the daily, we are in a fair value gap here. Okay, so when you're trading your 4-hour candlesticks, when they print, you can use a 4-hour key level. If you see a higher time frame key level with that, as far as the daily is concerned, in this circumstance, it makes it even more high probability. And if you go into your weekly, you see there's a little structure here where we tapped into this down close candle after we closed above it, and you're seeing the reaction. So you have a few confluences working in your favor here. Now, again, do not overcomplicate your trading. You have your 6 a.m. candle. Once that closes, you see this big, nice, thick candle, and I've mentioned this before. When you see these big ranges, you can mark out those ranges, okay? That's your 4-hour CR. Beautiful. Now, once that 10 a.m. opens, we are already in a PD array here. Nice daily fair value gap. We're getting a reaction and a nice H4. So you're going to go into your lower time frames, and you're going to go into basically what you prefer to be your entry model. Now, for me, I've mentioned this before. I do love the combination of an order block, inverted fair value gaps, and breakers. So you had a combination of things here. We had the 10 o'clock open, and we'll mark that off literally right away. This happens right at the 10 o'clock candle. We turtle soup. Let me get rid of these drawings here. So you have your 9 a.m. low is right here. Right? This 1 minute candle just takes it out very quickly. Now we are in an H4 fair value gap, so these reactions can happen very quickly. It doesn't necessarily have to dip through there. Taps in, we invert this fair value gap, we close above this downwards candle, that becomes your change in state of delivery. Okay, if you go to the 2 minute, you can see a beautiful order block here. Close above, come back in, retest the inverted fair value gap. You could use your 2 minute. I took a 1 minute entry here. If you go to the 3 minute, you could have waited for this breaker to get closed above, and your entry would have been a little bit higher. Now the 5 minute, if you were using the lower part of the candles here, these combination of candles, you would have missed your entry because it never re-tapped the top of that candle. But if you utilize when you see multiple candles moving down in the same direction, the top of them is considered the top of the order block. You would have had your entry here a little bit later as well. But I like to get in quick. I like to get in early. So I came in, purge, inverted fair value gap, and right as this retested, I was in here, stops on the lows, targets are 50% of the overall range. Now, we've talked about this in the past, and I mentioned this again. When you have these large ranges, 50% is gonna retrace about 80+% of the time. So you see these little signals. You make sure that you are very comfortable with your entry models. If they present themselves in these circumstances where you have your higher time frame per value gap, you have your 6 a.m. range, you're trading the 10 o'clock candle open, okay? You're trading the 10 o'clock H4 candle. So you want to see the 6 a.m. get purged, entry model presents itself, you enter. You have to take these trades. If you don't take these setups, you gotta keep working on things, okay? When these trades present themselves, if this breaks down, so be it, okay? Simplify your trading, guys. It's that simple, okay? You have your 6 a.m. range, you have your 10 o'clock candle. This is specifically for the 10 o'clock CR, H4. You get your purge, your turtle soup, you get your displacement back above these down close candles, CISD, inverted fair value gap. You have another fair value gap here that presented itself, so it gave you even more confidence, and you take it. You got, as you get a little bit more advanced, you'll be able to train your eyes to see relative equal highs. These highs here are nice and smooth. Price action likes to go out and take out that liquidity. There's a lot of stops here. But, that's a little bit more advanced work. I want you guys to focus on determining your range, okay? Your candle range. And if you're going to trade the 10 o'clock candle range model, you always mark out your 6 o'clock range. You wait for the 10 a.m. to purge, and you take your trade, first TP, 50%, and then the full TP there. You can take 80% of your position here, 50% of your position, whatever you're comfortable with. You can move to break even and let it ride. That's up to you. I'm not here to tell you exactly how to manage your money. As you get more comfortable with this, you'll determine what works for you. Okay. So in this trade, I had taken off everything here at these equal highs, and I didn't leave any runners here. I wasn't sure if this was going to go up or down, but I made about $2,700. You can see it in the Telegram. I annotated the entire charts, so go through that. I also put a PDF for you guys to look at for the 5 p.m. models and the 5 a.m. models and 1 a.m. model for gold. That PDF works fantastic. Those models work fantastic on gold. You can apply those same type of entries and candle ranges that you're trading onto NQ, but make sure that you're understanding that that PDF is based on a 159 candle print. This is 2610. So if you want to just focus on one model, the 10 o'clock candle range, you will go through your charts. You will see at 10 a.m. the NASDAQ market and the ES market reverses. It happens over and over and over and over again, especially when there's news. You had your 8 o'clock news open here, push down. You have a data high now at these highs. And this is something that I'll talk about in the future. If you go on my YouTube, you can see that I talk about data highs with CPI. Price likes to come back and take out the liquidity at the data highs. Some people only trade, these big news events. And once they see the reversal, they're taking it all the way up to the data high. But for now, let's focus on just annotating your 6 a.m. candles, focusing. Don't trade 9 o'clock, don't trade 9:30, don't trade 9:45. Wait for 10 a.m. to happen. Sometimes you'll see something like this till about 10:45 or even 11, and then you'll get the purge and the move up. Sometimes it happens very, very quickly, just like this. And other times it'll happen within the first 2 hours of the 10 a.m. candle open. So, hope that helps. Take a look at this. Analyze it yourself. Go through your charts, back test, mark out that 6 a.m. candle, find your key level, make sure there's a key level. You can take these without key levels just based on your entry model. If there was no key level here with the H4 or the daily, and you saw the 10 a.m. take out the 6 a.m. and you see your entry model present itself, you can take it. I would I would downsize. Don't go full size on those because they're not as high probability as the rest when you have the PD arrays. So, all right, guys, I hope that helps. Enjoy.